Welcome everyone to another episode of Wolf Street. For those of you that don't know, my name is Wolf, and for those of you that do, thanks for checking me out again. As always, you can check me out on social media at EveryTimeICash, and you can reach out to me directly at everytimeicash.com/contact. If you have any questions, comments, concerns, please direct them online at EveryTimeICash on all platforms, Twitter and StockTwits being the easiest of the bunch, or reach out to me directly at everytimeicash.com/contact. Today's episode is just going to be a follow-up to the video and podcast posted this morning. As always, there is a video podcast and there is a audio version available. The video version can be found on my YouTube channel, that's Every Time I Cash, and the audio version can be found on my podcast channel as well. I'm going to just power through some of the chart requests and kind of go over some of the details from the video posted this morning. And for those of you that are visual learners, this is going to be a little bit more intensive on the chart side, so you might want to check out the video version for that. This is going to be a power through, so let's just get through it. So without further ado, let's get started. On your screen, you'll see the NASDAQ futures. I went over this yesterday. I basically said that we had an upward channel in the NASDAQ for the better part of a decade. There's an uptrend, and we tested the bottom of that uptrend back in March when we had the sell-off, and we've just been grinding higher and grinding in what is now a triangle from the September 2nd high and the prior channel top now acting as support. Currently, we're just grinding and we're making higher lows and lower highs, basically waiting for a resolution. Markets hinged on the back of stimulus headlines and on the back of the COVID headlines, and we're just kind of back and filling, waiting for our next direction. Now, as I said yesterday, until we see a resolution of this downtrend in this triangle, whatever you want to call it, personally, I'm a net neutral. I'm looking for individual names only, and I'm looking for individual stocks that have a low profile in the NASDAQ in particular. So a couple examples of this, I've been in PLTR the last couple of weeks. I've been in Fossil today. Today we traded Overstock, just looking for things that can move and can move independent of the overall indexes. So that's kind of where my head's at. That's kind of where my targets are at, and that's kind of what I'm looking for until either I see a breakout with volume above prior all-time highs, which is basically 12,450 on the NASDAQ, or a breakdown below this 5-day, which sets up a potential test. Here, let me zoom in for you. A breakdown of this 5-day, which would then set up for a test of this 20, 50, 100, and ultimately 150 to 200 day moving averages. So that's the overall basis of where my head's at. As I said yesterday, the spiders in particular, the S&P is pushing up against this top of the megaphone. I drew it out for you yesterday, saying that anytime we touched the top of this megaphone, we sold off, and you can go back and you'll be able to see it in a little bit better detail. So if you missed it yesterday, I'd say please check it out. A lot of the macro kind of ideas and kind of logic that I'm using is outlined for you there, but I just wanted to do a little bit more granular individual names in this video, and I've taken a couple of requests from people on StockTwits and Twitter and in the chat. I want to give visual representation for this. I want to kind of give you levels and go from there. So in the S&P, like I said, we're pushing up against this prior top resistance and we're pushing up against that megaphone top. We have the 5-day that acts as support. It's right here. It coincides with prior all-time high, which was the first blow-off back in September. If we break this 5-day, we're setting ourselves up for a 20-day test, a 50-day test, 100-day, 150, and then ultimately 200-day if it gets that aggressive. Things usually move based on positioning. They usually move pretty aggressively if they are decisive here in the tail end. So some of the things that I want to watch for are how are we setting ourselves up for the end of this year? Are we setting ourselves up for a chase trade? Like if we do break out above this top and we do break out of this megaphone, we blow off, it sets up as a potential chase into the new year. If we start to sell off and then people start to be underwater, it does set up for potential selling begets selling kind of situation. I'm just kind of paying attention to those kinds of things on the macro side. But when I say macro, I don't mean like macroeconomics. I mean just like a broad-based view of things. Like I want to look at things from a 30,000 foot view and then kind of narrow down from there. Outside of that, I brought up the Russell and the Dow, which have been performing better. I'm going to cover a little bit more detail here, give you a little bit of the in-depth view of what it was that I was talking about yesterday. So on the Russell here, we're seeing that it's broken out, it's holding support, it's riding this 5-day, and dips are being bought. And this should continue to outperform on a short, mid-term basis. That's my opinion. It's everybody's consensus opinion. I don't believe that this will be a huge rotation that will last forever. Some people have that opinion. I just think interest rates are too low and that the flexibility that these well-positioned growth cap, mega cap names have is just too big. And this is barring some sort of antitrust stuff. So someone brought that to my attention. Obviously, if the government gets involved and starts breaking things up, that is something that would hamper that thesis. But until that happens, it's kind of where I'm at. I just, I look for reason. I brought up yesterday, I look for reasonably priced growing tech companies. So Google is my favorite in that space, something that I own, something that I look at. But now that we're here and we're looking at the Russell and we're looking at certain things, we're looking at changes, I want to direct your attention to the screen. This is the different sectors in the market since September 30th, from September 30th through November 11th, 2020. And if you look at it, this is a wild variation from how things had been performing going into September. So you have the XLK, which was the biggest laggard. You have the XLE, which is the biggest winner, XLF second, XLU third. In the video that I did before yesterday, so it was back in early October, I stated that my opinion for the best place that I'm looking for a trade in terms of capital in the market itself outside of Bitcoin and crypto was the XLU. I thought that it was favored whether Biden got into office, whether Trump remained in office. I thought it was a safety play. I thought it was an infrastructure play. I thought it was a lot of different things that did seem to play out profitably. I wasn't as heavily invested as I should have been in there. Like I said, I like to trade things like Palantir. I like to trade things that have a little bit more torque, but that is a slow and steady silent killer in the last 6-7 weeks. XLE just shows you just how wild it's performed relative to how it's performed year to date. And this shows you that when things get stretched totally to one side of the boat, how they can rip back the other way pretty quickly. I want to point out how things can turn and just give you another visual representation. The screenshot on your screen currently, if you're looking at it, is a screen cap from last Monday. This is how things played out when we got that Pfizer news. These are the COVID-sensitive names, and these are some of the names that I highlight, and I will highlight in this video in terms of charting. But if you just pay attention to this and you take a look, you're looking at airlines, you're looking at retail, you're looking at Disney, you're looking at infrastructure. These all ripped huge percentage gains across the board. And some of the most beaten up ones were some of the ones that were the most heavily favored on the back of those headlines. So if you take a look at AMC, for example, it was up 75%. Obviously, it was a $4 stock after the move. So obviously, those things are not, sustainable. But this just gives you an idea of how quick things can move and how quick things will alter the other way. And now, if I pull up on the other side, these are some of the stocks that benefited during the COVID crisis. So you're looking at Adobe, Amazon, BigCommerce, Microsoft, Netflix, Peloton, PayPal, etc. And the opposite is true, right? So like in the case of Netflix, for example, is down $30. It's 5%. It's not nearly 20, 30, 40%. But Zoom, which was one of the biggest movers on the back of COVID, and one of the biggest beneficiaries, was smacked roughly 15% on the back of that headline. So these are some of the things that broke when that headline broke, and these are some of the things that are kind of sloshing back and forth in the market in and of itself. And this is why you get that disparity between tech stocks, between the spiders, and between the small caps, mid caps, etc. So I'm going to pull up the Dow as well, just so we have a frame of reference here. This is the Dow. We're right back to where we were before we sold off back in February. I brought up a point earlier yesterday where I stated that you have an instance where a lot of these names that have benefited and a lot of these names that are benefiting are now getting stretched above their 10, 20, 50-day moving averages. And I stated very clearly that we're about 80% of stocks across the board in the S&P are trading above their, I think it was 85, are trading above their 10-day and 50-day. And that's where things start to get really frothy on the other side of the boat, where we're now looking at things that are a little bit unsustainable and uncharted waters. And it's where I look to lighten up. It's where I look, like I said, for things that will benefit independent of the market itself. So you've got the Dow. Dow is right back to where it was. If we can't get something to push it, significantly higher, and I don't know what that could be. I'm not really looking for that to happen. We should get a little bit of a back and fill. Now, the longer that this thing stays sideways and doesn't sell off aggressively, so if we don't get something like this, where I have an arrow on your screen here, or like this, another, which was back in September, if we don't get some sort of selling like that, we could just kind of chop back and forth until we get a resolution higher. I said yesterday that I'm looking for some of the headlines, the negative headlines, to act as positive catalysts on the back end. So you'll get a negative headline, things will kind of back and fill a little bit, and then they'll snap back and rip through it on the back of a resolution from those headlines. So that's where my head's at. That's where I'm looking. And that's a visual representation of that in terms of the markets. Now I'm just going to power through some of the charts that were requested. I'm going to start with Palantir. It's what I was looking at. I've been long Palantir since it came out. I was underwater for a bit, but I doubled my position at 11 once it broke to an all-time high. It hasn't looked back. Now for Palantir, I'm strictly using a close on the 5-day. So if we close below the 5-day, it's where I look to just go back to a core position and not be aggressively long. And then I'll look to see how it performs back to the 20-day. I use this kind of method across the board, so you'll hear me repeat myself a lot. Unity is another one. Unity made a new high today. It didn't close at an all-time high. It is above its 5-day. Look for the 5-day to act as support. If it doesn't, look for the 20-day. If that breaks, I have no interest. This is one of those stocks that is an own it kind of stock, I believe. It's not something that I want to trade day in and day out. In the same vein, look at Snow. Snow pressed up against its downtrend today, closed below its 20-day. If it can break through, it can press up and catch a little bit of momentum. It's kind of where I'm looking at in that respect. Other stocks that have done well, LYFT has been doing well. It's outperformed. It's moved a lot. It's gone from 20 now up to 40. It's basically doubled. You want to see it consolidate. You want to see it kind of grind sideways. I want to see it build a base, have its moving averages catch up, and then resolve higher through this 42 level. In the same vein, Disney, same thing. It's moved a lot. I'm waiting for it to just build this base, consolidate. The longer it can do that, and the more it allows these moving averages to catch up, the more constructive it'll be. So that's kind of where my head's at. Overstock is one that we traded long today. The trade was simply on the back of Bitcoin. It had used this $50 level as support. We traded it from the long side, looking for the 20-day to get tested, and then if it can get aggressive, push out to that 50, 100-day merge, and then look to sell it off there. DraftKings is one that I was asked about. It's pushing up against its 50-day. I'm a net seller in terms of we actually bought the stock back when it pressed up against its 150-day. We bought it around $35-36. We've been unloading on gap ups, and I'm looking to see how it behaves at this 50-day. If it doesn't push through, I'm going to look to unload my position as well there. Boeing is one that I unloaded today, outside of just commons that I own. It's kind of got this triangle. It's a little bit more easily seen on a weekly front. So it's kind of got this triangle that it's working in. Broke through its 50 week. It can press up and form another lower high here. I just better safe than sorry. So I unloaded all the calls that I had remaining. You can ride it against this 5-day. A close below the 5-day should set it up to retest its larger moving averages as well. Moving along, we got Tesla. Tesla's one that was asked about a lot. Tesla pressed up against that 460 level that I was looking at. I mentioned it on StockTwits and Twitter yesterday. Pressed right up against there. Just barely got above, trapped some people, and then sold off. If you paid attention to it today, we flagged it in the chat. It just basically checked back to that triangle breakout point that it had yesterday. I'd really like to see it come back and check and kind of grind here, let the moving averages catch back up on the outside of this. If it can do that, then great. It could set itself up for a mid to late December run up on the back of the S&P inclusion. I think for the most part that's pretty tapped, but we'll see if that is the case. Now, going back to this image where we highlight the XLE and the XLF have been outperforming, another one that's been outperforming is the XOP. This one it broke out and it's starting to break above all of its moving averages, and it should constitute some support moving forward. And that's something that I want to see. Is this something that's going to be able to grind and stall and then give an opportunity for a second leg, or is this something that's just going to rip back to an inflection point, call it let's say maybe the 57 level, and then start to sell off? That's something that I'm keeping an eye on. And then outside of that, just independent names, like I said, that were beneficiaries within the XOP and the XLE. So FANG is one of them. It's going to press up against this 150, 200-day moving average soon. If it gets there and it starts to stall, look forward to reverse. Valero is another one. It's stalled at its 200-day. Now it's just kind of catching the 5-day support, catching 150-day support. Want to see it grind, want to see it build a base. If you're one of these people that believes that values the new growth and it's something that you want to play for, you want to see these things really start to grind and move sideways for a little bit and then give you a second leg. Bear to bull reversals typically happen in that event. They kind of grind and they make a little bit of a base, and then they take off. These little ricochets that move higher and you just can't seem to catch an entry, those are like shooting stars, and a lot of times, more often than not, they'll fade. So we got Valero, we have that, we have the Exxon Mobil pressing up against its 100-day, same thing, can press up all the way to its 200-day and still be in a downtrend. Want to see how it performs, want to see it build a base, let its MAs catch up, and then go from there. In the same vein, Chevron, this one actually is pressed above its 200-day. So in the case of Chevron, if this thing can hold and kind of just go sideways for a little bit, any break of this recent high that it created, this $90 mark, puts it into this gap, which can fill above 91. Above 91 or 92, it can really play for a push back up to that $100 level. So really want to pay attention to these things and how they hold their major moving averages and how they can set up for further upside. Oxy is another one. This one basically created a double bottom and then started to take off. Still nowhere near its 200-day. That's up north near 17. Parsley is another one that we flagged. And this one's starting to act constructively as well, breaking out of this downtrend. It can really start to move and push up against $15 if it could start to get its legs. In the same thought process, these are a little bit more mature. Look at Dow DuPont. This is a perfect example. It takes off, builds a base, and now it's starting to consider poking out through that base for this next leg higher. Now I'm just going to power through some of the names that people are most familiar with. So Cloudflare is one. It's starting to press up against this resistance level. If it could take that out, it really sets up an opportunity to go back and test $71. If not, and look for the 20-day to hold. If not, I'm looking for a 50-day, and you'll want that to see. You want to see that hold. An example that I want to give in terms of how it's not just value and that like you have to change your frame of reference in terms of tech, how not all tech is the same. Here's Palo Alto. Palo Alto is running like a madman ahead of its earnings. It really took off, and then it had its report. It wasn't as bad, and here we are. So you want to find these opportunities that are not like heavily weighted in the NASDAQ. For me especially, that's what I look for. And you want to not group tech as a giant bucket. You want to think of them in terms of different buckets amongst themselves. Here's an example. CrowdStrike's another one, pressing up against this downtrend. If it can break out, look for prior all-time high to get tested. And I'm kind of want to trade it from breakout perspective, and then look to fade it here. Not like looking for a breakout and continuation. Just looking to play these little ranges that they could set up. Apple is an example. Still in this triangle. Apple is basically your market. It basically moves lockstep with the NASDAQ. And it's such a heavy influence that if it can break out, the market will break out. If it doesn't, then the market needs something else, multiple stocks to break out in order for it to break out. NVDA is another one that was requested. This created a double top. I'm going to just highlight it again. You have a double top here in NVIDIA. You can also call this a head and shoulders if it breaks down. And you could also call it a flag or a rising trend if it can break out into earnings, which is next week, I believe. So if you get an instance where this thing holds and it breaks through on earnings and it breaks the prior high, it should run. I mean, this is a $100 range that it's trading in. So it should run one way or the other. If it breaks down on the back of earnings, if it's not as good, it can really trap a lot of people given how violent that double top was. So that's one way to look at it. Another place to look. A little bit of value again. UPS starting to hold its 50-day after breaking out of this wedge. It's got this uptrend. If it could hold that, it could press up against prior highs. Is something that I want to look for. Walmart reported today, couldn't break out. Now it closed just at its 5-day. Again, I use the 5-day, 20-day, 50-day, 100-day. So just ladder it down. Break the 5, look for 20, break 20, look for 50, so on and so forth. FedEx is another one in the same vein as UPS. Really solid uptrend, holding. If it could break, it continues to grind higher. This is a really aggressive move off the lows in a very short time for FedEx. I'm looking for a reset at some point back to the 150, 200-day moving average. If that can happen and buyers step in, it's really constructive for a longer term perspective on FedEx. Team, this is one that is setting up again, pressing up against prior highs. I've got an alert, as you can see. If it can break above 200 with volume, I'm interested. If not, it's kind of dead money to me. Work, same space. This one tested, which is funny. Breaks below a support range, holds, and then just kind of grinds again. I don't like trading this one. I like things that are a little bit more easily tradable. So this is not one that I look at. Zendesk is in the same space, pressing up against highs. Any fall through any catalyst, who knows? And it could push the stock higher. Now I will note that as you start to grind and the more difficult it is for the market to break out, the more difficult it becomes for these individual names to break out as well. TWLO, I pointed this one out. Looking at the 100-day support, it's right up against its 20-day. If it breaks 290, I'm looking for it to test around 300, and then it's still in a downtrend. PayPal, dead money. That's the only way I can kind of describe it here. It's just jammed. You have better places to look. Peloton broke down below its uptrend. It's got 20-day and 50-day that are going to roll over. This is one that I'm not looking to trade, especially if the economy is going to open back up. And in the same vein, if the economy opens back up, here's an example of one that is operating the other way. So this is one that finally resolved higher and is breaking above all of its moving averages. Aggressive mover. So this is one that I'm keeping an eye on. Nordstrom. Kohls is one that has earnings as well, breaking out again. So you're seeing like a visual representation of the tide shifting. TJX is another one that has earnings. Let me just pull it up. If TJX can crush it, same theme remains. Ulta is another one I was asked about. Same concept. This downtrend started to resolve. Now you've got all these moving averages below it that should function as support. Amazon is one that I was asked about. It's in this triangle. Dead money, really no reason to play it. Want to see it resolve up, want to see it resolve down. Don't want to play it. Today we outlined that it on a gap up like that in the middle of no man's land, let it prove itself before you take it, and that turned out to be the right move, given that it didn't actually prove itself. I'm going to give you another example of one that I look for. Trip is an example. You have this long-term downtrend, and you can call it a wedge, you can call it a triangle, call it whatever. It finally resolved, and now it's pressing up against that 27 level, which acted as resistance. If we can push through 27, you've got the next leg higher in the stock as well. Let's see. STZ is another one. Got this downtrend, pressing up against prior resistance, push through to 208, 210, and you can have another leg. Rocket is one that I'm not trading personally, but it was requested. Here you go. You've got this kind of like a downtrend. It bounced off this all-time low, and then here we are resuming lower. Want to see these moving averages act as support. If that could happen, who knows? Otherwise, I'm looking for a retest of these lows personally. This is not one that I really trade. It's a lot more complicated than it needs to be. I find that there's better value elsewhere. So outside of that, let me see if there's any names that I've missed. Tesla, Apple. Oh, NEO was one. NEO's got earnings. It's, again, really, really aggressive move. Want to see these things kind of limp sideways or retest bigger moving averages. SMG is one. Here's your trend that it's holding. You've got your 20-day. If it can break free and create a new high, it could possibly continue. Otherwise, I'm looking for these major moving averages to move it or act as support before it moves. GOPRO is one that was asked about. GOPRO, you're going to have to pull back a ways. So pressing up against this prior support, and if it can push through, look at 10, and then look for these prior, here, let me just highlight it. You look for these prior support levels to act as resistance on the way up. So I'm not going to go through and point them out, but that's how I would look for it. I would look to see, okay, so it's got this 80 level, and then you're looking at basically, $10. Then you're looking at basically 11, and then you're looking at basically 12, 12.30, 12.90. So that's how I would look at it. That's kind of how I would map it out. It is constructive, though. It is respecting its trend. It is respecting its 5-day. It is respecting its 20-day. 50-day will be critical for it. These things that go bear to bull, they move pretty quickly. An example of this is Fossil, which is one that we took. Still long Fossil. Been long for a couple of days now. Gonna press up against its our major gap fill target that we were looking at, which is $11 basically. But if this one can keep going, this one's low enough of a float that it could push out to 15 within a month, probably less. So this is one that I want to keep rolling into, stay involved. As long as the 5-day holds, it can continue higher. Outside of that, let's see if there's anything. Oh, Baba. Baba's a good example of how fast things can turn. So it looks a little messy, and it's just because someone brought this to my attention, and I just kind of want to give you a perspective of how you can look at things differently. So in the case of Baba, I had this uptrend that was in this bigger megaphone, and it was respective of this uptrend, and then it finally broke on the back of earnings. Now, someone said that it was in this megaphone, so let's just delete this uptrend real quick. And sure, that's one way to look at it. I'm not here to tell you that, there's only one way to look at something. There's a lot of different ways to look at things. And that's why a lot of people believe that charting and technical analysis is bullshit. But if, let's say, hypothetically, this is an instance where you've got this megaphone, right? Another way to look at it, and this is something that I would point to, is you could possibly have this head and shoulders situation that's forming in Baba. So you could get an instance where you find support here and you get the stock run up to this 50-day and then stall there again and then start to roll over again. If it breaks through this trend, let's highlight this in blue, make it easier. If it breaks through this megaphone, if you want to call it a megaphone, if it finds a way to break through, I'm looking at the 200-day as support. So this is just an example. This is not a way that, I'm not looking here to tell you this is the end-all be-all. I'm just saying that there are different ways to look at things. For me, I was using this uptrend as my way. That turned out not to be inaccurate. It rolled over. As soon as it rolled over, I had no interest. But other people use other things. So if you're one of these people that want to try to bottom fish, I'm not one of those people. That's how I look at it. If it breaks down, you're looking at 240 basically, which is 200-day. Outside of that, you get JD. You want to see it consolidate. You want to see it break out above prior highs. PDD was one that just kind of took off. Again, this is just different ways you can look at things. It basically went right to the penny on this. There was a channel that it lived in, went right to the penny, and then it stalled. Here we are at the 5-day, and I don't really see a lot more upside unless it were to break through on some sort of headline. So I'm pretty much looking for a gap fill, and then I want to see the 20-day hold. Qualcomm's another stock that was asked about. We're really just wedged up against this prior all-time high. Sorry about that. My mic dropped. I guess it was not plugged in properly. But anyways, so Qualcomm is one of these stocks. If it could really press through on the back of some headline or on the back of volume or on the back of just a technical breakout, it's one that could really move. This is just another example of how not putting all of technology in the same basket as tech is something that you want to avoid. So if you just look at things as, tech, then you could miss out on opportunities. And let's say, hypothetically, Qualcomm breaks out. Like you would miss out on that opportunity should that be the case. TTD is another example of this. This is really constructive. This is not a bad chart. So if I just look at Amazon, Netflix, Google, Apple, and and Tesla, and I'm like, that's tech, and then I miss out on opportunities like TTD, which is still in an uptrend, still in its solid, it's still performing solidly, and it's still not being sold. So you don't want to fall victim to this notion or this theory that all tech is tech. You want to just understand what it is that is working, what it is that isn't working, and you want to pay attention to that. And in my case, I trade these things based on a rotational situation. So when one basket of stocks is working, that's what I'm focused on. When another one's working, that's what I'm focused on. ROKU is another one that has not given up the ghost yet. ROKU is a little bit, I don't like to trade ROKU because it's such a hardware intensive stock company, whatever. And I prefer names that I'm not going to just wake up to a tape bomb with. But ROKU still hasn't broken down yet. The 50-day is going to be the tell on this one. So here you go, 50-day. Outside of ROKU, I brought up Netflix yesterday. But Netflix, again, it's momentum works both ways. This one's starting to reject its 20-day and its 5-day. You want to see the 150-day hold. If it doesn't hold, this lines up with 470. 200-day should come quickly. 200-day comes down to $450 a share. That's a soft, solid spot for that stock to go back to pretty easily, actually, if it starts to break down. But this is not something that I want to look to press my short into without having some sort of reason to press a short into it. So this is not something that I want to front run. This is something that I want to just have in the back of my mind. And I want to say, okay, if it does break down, this is something that I want to look at. So a couple of last minute ones that are coming in, CLDR. This is one that we did own. We dumped it. And this is not something that I want to hold or I want to get into. But here's your downtrend. You have this downtrend to navigate through. And then in a more near-term version, you have this downtrend that it's in. So if it could break up above its 100-day, look for it to challenge its prior downtrend. But I'm not really interested in this until it can actually break out through this longer-term downtrend that it's been in for the better part of 3 years now. So that's where I look there. eBay is one of the last ones that's coming in late. You're pressed up right against a prior all-time high and a 200-day moving average. Here's an example of a situation where if you were waiting to get into eBay and you weren't chasing, you want to see how it behaves here at the 200-day. If it can hold and if you could just start to turn there, this is an instance where the 200-day prior all-time high, you want to pick your shots. That's where you kind of look at it and you say, this is where I want to pick my shots. So outside of that, you've still got quite a ways, and you've got a lot of wood to chop on a stock like that. I want to see if there's any other last minute ones that I forgot. TWLO we went over. Right. Yeah. So as is the case with how things move, when things start to go. So RIOT's one that was asked about. Things start to go. They really go fast. At this point, you're like really late to the party. Sure, it could be parabolic and it can go double. Who knows? I don't know. But things like this, I don't really chase. After one day, I want them to consolidate, and then I want to buy breakouts from that point on. CGC is another one, Canopy. Canopy's pressed right up against a important level for it, I guess. Prior resistance or prior top, which is $25. If it can press through 25 meaningfully, it's something that I want to keep an eye on. In the same vein, I mentioned GRWG a few days ago, weeks ago, whatever it was. No, it was a few days ago, last week. As in the space, this is the one that I want to pay attention to. Here we are making new highs. Now it's just respecting that 5-day. Below that, I want to respect the 20-day. So if it could hold there, I'm looking for a retest of this prior high, which would probably coincide with that 20-day. And if it could go from there, I want to look for it to accelerate from there. AMD is one that was just came in. AMD, not AMD. So AMD, again, you've got these moving averages. At this point, it looks like dead money to me. I'm not interested. If you are, good luck. Have a ball. I probably have my lines wrong. It's probably closer to something like this. But that's just predominantly because I'm not interested. But you've got this downtrend. You've got rising moving averages. This has been a huge winner. It's not one that I want to continue to press my bets on, but it is one that everyone else follows. Jamea's one. We've got a cup and handle here. If we can break through and we can push out above that $20 level, this is something that can continue to move higher. And it's a really low float stock, so this kind of fits in with some of the things that I'm looking at. Upwork, same concept, low float, broke out all-time high. This is beneficiary of stay at home, but this is something that could moving forward continue a trend because it's not just a stay at home situation. So now that a lot of people are going to be working from home regardless of whether or not COVID exists, this is something that can continue to work even in a post-COVID world. Let's see if there's any other ones that I've forgotten or that I have time for. Oh yeah, so some of the other ones, General Motors, I went over this yesterday, but General Motors pressed up against this 40. It's really extended at this point. Want to see it consolidate, build some more legs, and then continue to go higher. CAT is another example of this. Just really solid uptrend that it's been in. 50 days been respected. It's been bought against that 50-day over and over again. And until that dies, that's basically the barometer that I'm using on a stock like that. Fitch is one that is probably where I'm going to end. This just shows you why it is that I use the 5-day. So 5-day, 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 5-day. Now, if it closes below that 5-day, I'm out. That's something that I don't want to participate in until I see how it behaves on the 20-day, unless I'm looking to sell the pops on Fitch. So I'm going to stop here. Actually, I'll do one other thing. I'm going to stop on Tesla. In addition to just looking at the daily charts, I find that it's really important to know like where it is that a stock is in a more granular level, right? So in the case of Tesla, we have that chart for the daily, right? And so I want to pay attention to see how it behaves on an hourly basis, on a 20-minute basis, on a whatever. And that can kind of give me an idea of where we are and when I want to lighten up and when I want to like average in and so on and so forth. So in the case of Tesla, we basically went right back to this triangle breakout. We held, and then here we are, we're holding. We bounce from there. And in the same vein, you have the 5-hour moving average that acted as support right at that triangle test point. So in the case today, it's something that, I stated to our guys and girls that it's not a stock that I want to come in and start buying. You want to give it 90 minutes, an hour to 90 minutes to kind of set itself up. And then you want to see how it behaves and how the market's behaving before you move in. And that turned out to be the right approach. But if you were someone that wanted to play it, and so we highlighted this in real time in the chat, it was right up against that 435 level. It had come up right up against this triangle, and that's something that we wanted to pay attention to and see how it behaved. And so in the case of Tesla, in the next couple of days, what I'm paying attention to is if it could break below this 433 level, I'm then just going to pull up an hourly chart, and then I'm going to see, okay, so we're at 433 as the bottom today. What are the next levels of interest? So in this case, it'd be 430, and so I could just go in and outline it, be 430, and then from there, what are other levels that it held? Oh, well, it looks like this 427 level is something that I want to pay attention to. And then I also want to pay attention to hourly moving averages, see if they're respected on a stock like that. I'm not saying that you invest on stuff like this. I'm just saying that you set ranges based on where things are on a daily chart and then how they behave simultaneously on a shorter time frame. So I'm going to end there because it's running a little bit long right now, and 45 minutes is a lot. So if you stuck it out, I appreciate it. Thanks for your time. If you reached out to me and told me what you wanted to hear or see, thanks for your time. I appreciate it. If you have any questions, comments, concerns, want to cuss me out, every time I cash on social media, everytimeIcash.com/contact. If you want to reach out to me directly, if you have topics, ideas, if you like this, please like, comment, subscribe. Please leave me comments on the YouTube in the comments section. That gives me an understanding of what works and what it is that people like and how I can help. If none of that appeals to you, then hey, thanks for that 40 minutes that you just gave me. I really appreciate it. As always, please stay safe, please stay profitable, and as always, stay locked in.